Well, good morning and welcome to the Rate Update with Dan Frio. My name is Dan Frio and I do this every morning. So what are we talking about today? Well, tomorrow the Federal Reserve is going to come out and tell us what they plan on doing. I don't think there's any secrets there that they're probably going to raise the federal funds rate 0.5%, but they're going to continue to monitor all events that's going on with the economy and the world. So let's get over and see what the news looks like today. Is there anything that they, at the last minute, they might see or kind of freak out about that would cause them to change their thoughts? I don't think so, but let's get to it. So the first thing we see in the headlines is stocks are flat on Tuesday as investors remain on edge for the Fed's decision. So it's highly anticipated that the Federal Reserve is going to raise the federal funds rate 0.5%. So that's what we're going to talk about. So if you're new to this channel, my name is Dan Frio. I do the rate update every day to help you guys understand the real estate market, especially all the options that you have in regards to financing. So that being said, let's get to it. I'll get my big head out of the way. So the economic calendar for today is basically the only thing out today is the JOLT index. What is the JOLT index? Well, it's basically telling you how many job openings there are. So if you're in need of a job, there's a lot of them. So the number that came in previously, there was 11.3 million, 11.3, yes, million job openings. Now, a lot of people say, well, those are all just junk jobs that nobody wants. Well, it's hard to believe with 11 million. But that being said, the expectations was for 11 million flat. It actually came in at 11.5 million. So 500,000 people more, or a half a million more jobs are open. Okay, so if you're out there and actively seeking a job, good luck out there, but the odds should be pretty good because there's a lot of openings. All right, that's basically the economic calendar for today. And then everybody else is just sitting on their hands right now and just waiting for the Federal Reserve to come out and tell us what they're going to do. And they'll do that tomorrow at 2 o'clock. All right, so being that that's it for today, really, let's go over here and see how this is all affecting the mortgage-backed securities market. So this is the bond that trades on Wall Street that we follow. And we follow this because the direction of this tells us what is happening to mortgage rates. So here's how this works. This is a bond that trades on Wall Street. It is tied to mortgages or mortgage rates or yields. I'll put it that way. So this is the price. As the price goes down, and you can see it in this chart here, this is basically a 1-year chart, probably going back to, the 1-year chart. Look, we were steady all the way up until about October. Then everything started to unravel. And then basically back at the beginning of the year, the wheels fell off. So we have plummeted since then. So again, what happens here? Let me explain this. What happens to the mortgage-backed securities? So this is a bond that trades on Wall Street. And here's how bonds work. And this is representative of the price. So as the price goes down, yields or rates go up. Here's how it works. Let me make it make sense. So at a high price, let's go with a high price. So as they go up, the yields come down. All right, so let me explain it. So there's a bond, and next year I'm going to trade in my bond. It's worth $100. It's got $100 face value. So meaning when I turn it in whenever, I get my $100 back. So how much do I have to pay today? So let's say I pay a high price. Let's say I pay $100 for that bond. Okay, so I give you $100. A year from now, I hand you my coupon, and you give me back $100. What was my yield? What was my rate of return? 0. I gave you 100, I get 100 back. Okay, so let's drive down the price. Okay, the way I explained it, it should drive up the yield. Okay, let's make this make sense. So today I give you $50. So I give you half the amount of money. And a year from now, you give me $100 back. So what's my yield? What's my rate of return? 100%. I doubled my money. So do you see how the price, when it goes down, it drives up the yield? That's basically how bonds work. So we have basically a catastrophic, events going on in the mortgage-backed securities market, and you can see it right here. Sorry, I'm looking all over my shoulders because I got 12 screens going on. So based on that, what's going on with rates? So rates aren't published yet. This is basically where Mortgage News Daily, they post at the end of the day, and then they repost that same rate sheet at the beginning of the day. So this hasn't been adjusted yet for what's going on to the market. So we should see this recover just a little bit. So we might see mortgage rates come in maybe 0.05 lower, maybe across the board. But let's go over to where mortgage rates started today, or basically where they ended last night. So if you watch my last night's report, it's the same rate. So let's go across this. I'll just read it to you real fast and explain how this works. The 30-year fixed rate, according to Mortgage News Daily, is 5.55. It is up 0.14. So that means yesterday or the day before, the 5.55 was 5.41. Okay, so it's raised that much in a 24-hour span. Okay, that's crazy. All right, but it does come with points also. There's a cost. So when you analyze things, I always want you to look at how much it cost you to get that particular rate, to get that particular loan in essence also. So here's what you do here. Here, this says it comes with 0.4 in points. So basically a point is a percentage. So if this was 1% or one full point, it would be 1%. So this is basically 0.4%. So how you figure this out is you take your loan amount and then you multiply it by, I would hit times 0.4, hit the percent sign, and then the equal sign. That'll tell you how much you have to pay to get this rate. Now this is basically, I'll say this is kind of, I won't say a fictitious rate, but this is a blend of rates for mortgage lenders all over the country. So some are higher, some are lower. So again, this is just a blend or an average. So let's go across. The 15-year is up 5 basis points to 4.89, comes in also with a 0.4 in points. The 30-year fixed government loans, FHA, VA, and USDA, I lump them into one because they only have this cell for FHA. So let's just lump them all in the government loans. At least it gives us a benchmark of what's going on. So we see that's coming in at 5%. It's up 12 basis points. The 30-year jumbo's up 12 basis points to 4.68, no points. And the 5/1 ARM's skyrocketing up 4.55, up 17 basis points. So it's at 4.55. The sentiment for today is somewhat positive. There's basically no news out. Let's go over here and we see the chart of where rates are historically over the last, let's say, 8 years. And we're at the highest levels that we've seen in a long, long, long time. So that's my report for today, guys. But if you would, join us. I'm on Sir Ashley's show. He's a realtor down in the Charlotte, North Carolina area. He just moved into another home. He's settling in, but he's doing a live event and asked me to join him today to talk about a few different programs, such as ARMS, USDA, and a couple other variations of loans or programs that a lot of people just don't understand or don't really compensate, or they just get, like if I say ARM, the first thing you're going to say is, well, that's just a terrible loan, and that's basically what crashed the market back in 2006 and 8. You would be correct, but there's a lot behind the scenes there, and there's a lot to explain. ARMs have been adjusted, they have been modified, and they're not a bad solution to today's problems we have when it comes to mortgage rates. So join us today on his channel. Just go to his channel, just Google Sir Ashley Real Estate. You'll come to his YouTube channel, and please join us this afternoon. But if you'd like to find out more about me and my team, go to therateupdate.com. I'm a mortgage broker. I service most of the whole country. Here's where I can help. If you're in the process of getting a mortgage right now, send me your loan estimate. So here's how everything works. You apply for a mortgage, they give you a quote or they lock you in. Then they have to send you what's called a loan estimate within 3 days of pulling your credit. It's going to go over the property address, the property's value, the loan amount, and then it starts giving us all the information about your loan. What's the rate? What's the costs? What kind of program is it? Is it locked in? All this stuff. Send it to me. Help me work with you to analyze it. What we're going to do is say, what you have is fantastic. Great job. Okay. Or we're going to come back and say, hey, I scanned the whole country over 130 different lenders. There's a couple programs out there you might be intrigued at. They can save you money on the rate. They can save you money as the down payment. And we can save you money on fees. So that's our whole objective. So that's it for right now. If you'd like to learn more about me and my team, please, right up here, you can give us a call. You can apply online, you can schedule a meeting, and we even have a bot now available that you can ask questions right online if you don't want to call in. So that's it for right now. I will be seeing you at the Sir Ashley show later this afternoon, so I probably won't be doing a midday report, but I will post it at the end of the day, give you some feedback on what we're hearing from the Fed and any reactions that the market's having. So God bless, guys. Thanks so much for watching. I will see you later this afternoon, but try and check us out on the Sir Ashley show if you would. Take care. Hope to see you then.